plastic bag flies across the highway, you and I know it's plastic bag, we drive right through it. Founders in our portfolio. So you try to understand the authenticity of the founders. What is a trajectory that allows them to be the right person to be building this? We do a lot of work on the team, the idea, the market, the timing, and then a lot of work post-investment.
Welcome to the Smart Venture Podcast. We're here to bring you the latest and greatest from the Silicon Valley, where unicorns roam and innovation never sleeps. We've got top investors, superstar founders, and well-known tech executives lined up to share their secrets on building and investing in successful companies. Just a quick disclaimer, while we may sound like financial geniuses, but please don't mistake us for your friendly neighborhood financial advisors. So let's get started and dive into the wild world of tech entrepreneurship. Thank you so much for coming on the show today.
Grace, thanks for having me. It's a pleasure.
So to give the audience a little bit of background, you grew up in India, you moved to Canada when you were in high school, and then later on you studied software engineering in University of Waterloo, and then you realized that you didn't really want any job, you only wanted to be a founder, and then later on you joined Founder Collective and invested in many great companies. Cruise was one of them. The founder was on our show before, and then Airtable was one of them. You invested in a lot of unicorn deals. And then later on you started at Afore. It's been like over 7 years since starting, and then you guys invested in many amazing companies. To start off the show, I would love for the audience to learn from you about maybe one lessons that kind of impacted you early on in your career that kind of shaped you into who you are today.
Yeah, look, there's been so many lessons along the way that I've picked up. I'd say the one that has always struck me, I think it might be a Steve Jobs saying, and maybe he didn't invent it, maybe he heard it from somebody else, but the idea is that you really connect the dots looking backwards, not forward. I'll give you an example. I grew up in a tier 3 city in India, and India's come a long way over the last few decades. But, when I was growing up, there wasn't as much access to opportunity and like exposure. This is kind of the very, very early days of the internet. Like, I was growing up, I was in like middle school in the 90s, and like late 90s and things like that. And the internet was just sort of starting to come to the foray. So like, the exposure to opportunities, what you can be one day, in your career was limited. So growing up, all I could see was like IIT, which is obviously one of the best tech in India, and like become a software engineer and like maybe make my way to the US. Like that was sort of the like North Star. Like if I could have any dream, like that was right. My family moved to Toronto, so the aperture expanded a little bit, right? It started to think a little bit bigger. And I went to Waterloo for software engineering, kind of again along that path of becoming a software engineer. And I remember when I started at Waterloo, like Microsoft. This is like in 2003, Microsoft was like one of the coolest like tech companies, right? And one of the best jobs you can have. So like that was the North Star. It was like, okay, not just get into the US, but I want to work at Microsoft. So like that was like the dream. And then, I worked at a bunch of different places, including BlackBerry back in the day when it was still a cool company, worked at Amazon in 2005, worked in Singapore, worked in London, and sort of the thinking evolved to say, okay, maybe I don't want to be a software engineer, or maybe my career aspirations a little bit different, and I wanted it to be more on the business side, and that kind of led me to start a company because I wanted to solve problems and build something. And then, when I started a company, I didn't know what venture capital was, right? I mean, especially growing up in India, like that concept at the time did not really exist. So when I learned about venture, initially it was a little bit crazy. I was like, so somebody will give us $1 million, like, and not take my house or like my car, like, is it a loan? Like, what's the catch, right? And it's like, you give it a shot, and if it doesn't work, like, no harm, no foul. And it sounded a little crazy. But, I learned about venture, we raised venture capital, and that sort of first opened my eyes to like venture capital as a job, right? As a business. And I was like, oh, this is kind of interesting. Like they get to work with lots of different founders, help these businesses grow. Like sounds a lot of fun. But I was kind of building a company at the time, and that then brought me the Android team and then business school. And it wasn't until business school I started thinking about, okay, like what do I want to do next? And I was like, venture was something that's really interesting that I kind of heard about a few years ago. Let me see if that something could be my thing. And I first worked part-time, and then I ended up joining full-time. Anyway, point being, like, if you asked my 15-year-old self or 12-year-old self that, like, I told him, like, this is what I'd be doing 20 odd years, I wouldn't believe you. I don't see how what I want to do today, where I am, how that leads to where I've ended up. And I think you have to be like open-minded to that. And I think I'm always just focused on like the next thing, and then like maybe think a little bit about the thing after, but not too much, honestly. Just like focus and do a really, really good job with your next thing, but constantly be learning and like evolving as a person, as like my aspirations and dreams. And I think looking back, when people ask me like, how'd you end up in venture? Was that like always your plan? I was like no, like unlike some VCs here, like my dad was not a VC, and like I did not grow up in Silicon Valley, and I had a very different plan in mind, and I've ended up somewhere very different. I'm very happy for that. But like I think you just have to. So when I find when some people are so like programmatic about like, oh, I'm gonna do this, and then like 20 years I'll be doing that. I just don't know if life works out that way. I think you just have to focus on the short term, do a really, really phenomenal job with some idea for the long term, but just, give it your 150% and good things will happen.
Yeah, totally. I love what you said about doing things at 150% and then see what's going to happen. And I wonder, selfishly, I'm going to ask you a question about parenting or just growing up. I have a 4-month-old now, and then like I really want to train him to be someone like you who is like, self-motivated and all that. I wonder what were things that your parents did differently back in time that help you to become a motivated person on your own?
Yeah. It's a good question, and it's a good question because I also reflect on that a little bit. And I've got 2 young kids, and I try to figure out how to like give them the right values and work ethic. It was a mix of like, I guess, carrot and a stick, if you may, right? Like sort of, you give the guidance on like, because I think, I feel like sometimes, especially in America, things go a little bit too extreme where kids have too much agency and too much like apertures too wide on like what they want to do and what they want to experiment with. And I don't know, like, I think at least for me, I was not very mature, right? Like maybe not even now, but like for the longest time. And it's helpful to have some level of guidance where like, for example, my dad was like, look, I think software may be the future, right? I think like, and again, growing up in the 90s, like, and especially coming out of the dot-com bust, like a lot of people were like, software is dead, don't worry about it. Like, it's crazy to become a software engineer now. And I think he had that fortitude to be like, no, I think like I feel like there's still going to be a lot of value creation here. You should like do this. And if it wasn't for that, I'm not sure like I would have figured it out. Because when you're a kid, like the shiny object is what you get excited about. Like I remember like when I first took my first flight, and I was like, I don't know, 6 or 7 years old, and went to the cockpit, and I was like, oh my God, this is so cool. Like, I want to be a pilot, But like, it's just because it was cool, right? And like, it wasn't necessarily what I genuinely wanted to do or was best use of my skills and talent. So I think there was that, but at the same time, giving like not being overly, prescriptive about it, and like letting the kids kind of also discover what they're really good at and like where their skill set is. So I think it's a tough balance to strike, but I do think that's the right balance where you don't want to completely leave them on their own, but you also don't want to be too overly constrictive, which I feel like certainly in India, like sometimes things can be a little bit too much. Like, no, if you're not a doctor, a lawyer, like, or an engineer, maybe, it's like, that's it. It's like game over. And I think kids, don't end up realizing their potential, if you are too prescriptive.
Totally. I love that. I feel, giving some guidance, but not limiting certain things that they really, really wanted to do is like super important. And like, since you mentioned about your dad is mentored at you to like go to do software, I wonder who is on your personal board of advisors when it comes to picking a career? And then especially in venture, I feel like a mentorship driven business, who did you learn from when you were at Founders Collective or, doing things before you started Afore?
Yeah, I don't have like a personal board of advisors in a very like formal way. I know some people are like, oh, this is my formal mentor, and that's great for them if that works. I think where I've struggled with that concept is like folks that I would want to mentor me like formally are too busy to like doing their own thing, and they're like, I don't know, this commitment of like a certain number of hours, like, and I've sometimes made that ask, and people are just like, look, I'm happy to like spend some time with you, but I don't want to make any commitments that like I feel guilty if I can't follow through. So I've always struggled with like a formal group like that, and I've felt I've learned a lot from it, just like osmosis, just being around really, really smart people who are several steps ahead of me, and like and just being a lot of times fly on the wall, and like just being around them. I think it's really helped me learn a lot. And I think that's a low kind of friction way for people to help you as well, where they're just kind of going about doing their thing, and then you kind of wedge yourself in. So for me, when it comes to venture, it was really Founder Collective. And I think venture specifically is a very much an apprenticeship business, because there's a lot of art to the business, and it's not just science. Because when we're investing at the stage where we do, it's like founders and an idea. It's like, especially first time founders, it's like, how do you know if this is going to work or not? Is this a big problem to be solved? Could these founders really build a company? Like, a lot of it is like hard to quantify in like an Excel sheet. So I think you want to be around smart people where you can see sort of how they make decisions, what gets them excited, what doesn't get them excited, and not in a way where they're teaching a class or like sitting down with you one-on-one and like giving you the lesson, but like you're just in board meetings with them, you're just in those diligence meetings with them. And I think I was very lucky. I was at Founder Collective for 4.5 years. I was the first person to join the team full time, back in the day, and I've grown a lot and still apply a lot of those learnings that I picked up at Founder Collective.
Totally. I guess like, so what were some lessons that you've learned? So like we could use maybe like some of your like portfolio that I personally very interested about, like, Cruise or like Airtable. Like, how do you find these deals? And then like I feel like they must be like super competitive to get in. So I wonder like how did you kind of like position yourself and like your firm to like be able to sneak a check in?
Yeah, totally. Look, it is competitive, but it's not competitive at the same time, right? It's weird. And what I mean by that is we don't see as much competition in the way one would define competition, which is like zero-sum game, which is like, I really want to do this deal and I couldn't do it because I couldn't get allocation. It does happen once in a while, but not very often for a few reasons. One, we're investing very, very early, right? So like these companies usually don't have a product in market, have no revenue, and like, no customers and so on and so forth. And most VCs want to invest when there's some traction, like customers I can call, do some diligence on the market and so on and so forth. And hence are very happy to have somebody like us do the deals before them, right? And the other investors on the cap table alongside us, the round where we invest, tend to be angel investors, and they're not very sharp elbow, right? They're writing small checks, 25, 50K. And a lot of times we bring them in, right? To say, hey, I think you could be really helpful. You should come along on the ride with us. So it's not competitive in that sense a lot. And of course, keep in mind, we're the top of the funnel, right? We look at 6,000 companies a year, for example, we invest in 10. So like it's like very, very highly selective. I'd say our competition are deals we never saw, right? And it's essentially like our competition in some ways is ourselves, right? Because there's so many companies getting started and we can only cover so much surface area, right? Given the small team that we have. And you want to keep the team small so we can move fast, we're nimble, and it's on a lot of coordination overhead. And because of that, there are founders who were not able to get in front of at the right time, or for whatever reason, they were not on their top 3 list. And I think that's the problem we try to solve all the time. And then the other competition we have is when we fail to imagine the future alongside the founders, right? So for example, Carta, which is a company that historically has done cap table software, like the founder Henry, he pitched me, I think like 2 times, maybe more. And I just failed to imagine how big Carta could be because I was so stuck on like cap table software. I was like, oh, that sounds like a nice to have. Like cap tables, like how many companies in the world really have like cap tables? It's really startups, like is that really a big company? And like I just failed to imagine, just how big it could be. And like those are like looked at Solana when it was getting started, and like we weren't very deep in crypto, so like I just couldn't again imagine just how big Solana could be. So I think that's another place where we sometimes struggle, but I feel like we're pretty differentiated is the fact that we go in very early, right? Again, we're going in pre-traction, which most investors don't want to do. We write meaningful checks, right? We're investing $1.5, $2 million, which is pretty much the entirety of the capital these founders want to raise. We give them a fair price, a fair valuation for the company. We spend a lot of time helping them get to Series A metrics, get to product market fit. So I feel like given just how unique our product is, losing deals we want to do hasn't been an issue, but there's obviously other things we're working on.
I wonder, so like I feel like let's say Cruise or Airtable, if they pitch me, I would have very different I would be in a very different mental space to think about each company, right? Like Cruise is self-driving car, that's emerging tag. It's like it happens, it can be like a really big thing. And then if it doesn't happen, it's like my money's gone. So it's a really risky bet. Airtable is kind of like a better Excel sheet vibe thing. It's a lot safer when you look at it. Like since you have worked on both deals, either source or led the due diligence, I wonder when you encounter deals like this, you encounter these 2 kind of deals, what's your thinking process like? And then as you mentioned, you look at 6,000 deals a year and then you invest in 10 of them. What are things that you would, besides like the earned insight more than health, so like about like these other companies, like besides the earned insights, I feel like each founder, when they pitch you, they must have something to talk about. But like besides that, how do you kind of like do due diligence to kind of like pushing the deal forward?
Yeah, and I think let's just take Cruise and Airtable as 2 examples. And in some ways, they are a little bit of an exception because they're more binary bets than I think a lot of companies are, right? To your point, like Cruise, trying to go after a very big vision. If it works, it's massive. High chance it doesn't work. Airtable, the same thing. Most companies tend to be a little bit less binary than that, though venture capital largely is a binary business where a few companies end up accounting for most of your return, and the vast majority of them, lose capital or barely move the dial for the fund. So it's true, but what we try to do is like break down that journey of like zero to like, let's say like really, really big business, IPO, big M&A, whatever it is, intermediate steps, right? And I think this is where you see certain founders stand out more than others, right? Because see, it's one thing to like talk about a big vision, I want to change the world. I want to make driverless cars. I want to kill Excel. I want to kill whatever, Oracle, Salesforce. Like, yeah, sure, we can as a vision, but very few founders are able to like sort of show you like step by step how they're going to get there, and are actually able to talk both at a very high level in a very compelling way, but also the details, right, on exactly how they go step by step. I remember when Kyle Voigt, who's the founder of Cruise, he drove me down on the 101 with like the very like pre-alpha version of Cruise. Like all it did was like it barely kept the car in between the two lanes on a highway. So it was like a very, very rudimentary product. But I asked him, so like you're trying to build driverless cars, like that's a very, very long journey. Tesla's trying to do this, Google's doing it. Like, how are you going to be able to like win and compete in this what will be a highly competitive world and a very capital intensive world? And Kyle at the time could articulate to you to say, yep, I totally agree. Building a driverless car is very hard. For example, if a plastic bag flies across the highway, you and I know it's a plastic bag, we drive right through it. For humans, easy. For a computer, it gets confused, right? It's like, oh, should I slam the brakes? Should I keep going? And then there's like millions of these edge cases, right? And he's like, look, the way I'm going to solve for that is I'm going to build essentially a better cruise control, right? Which is like keep the car on the highway, between the two lanes, maintain distance. So like a few features, I'm going to retrofit in cars that don't have those features, and it'll be an aftermarket product. I'll get 50 customers. I'll put a gigantic hard drive in the trunk. I'll give you free car wash, and you come in every week for the car wash, and I'm going to like download all this data. So I can like get the data and learn really fast. Because what I don't want to do is have like hundreds and thousands of cars on the road that we're paying for, but instead I'm going to like have a lot of my customers help me generate data. I'm going to get the data. I'm going to code those use cases, and I'm going to keep going from there. And you can sort of see how he had thought about a lot of the detail as well, and not just the highlight, right? And that's when you start to go like, okay, this is how this company will get de-risked over time, right? Same thing with the Airtable, right? It was like, okay, we're going to go after this customer base first. We are going to be the better CRM for them. And then once we do that, we're going to go after this customer base. And that's how you sort of see, okay, it'd be great if this company gets to the ultimate vision, but even if they build something along the way, this could actually be a really good business, right? And sort of that is what you're looking for in the best founders who can really execute on a day-to-day basis, on a quarter-to-quarter basis, make progress, de-risk the business, and keep funding the company from milestone to milestone.
I have a follow-on question on that. So like, I feel like I hear so many founders like answer the question perfectly, but like when it comes to execution, people are like switching like ideas week to week. So I wonder like, how do you quickly do due diligence on the execution part? Besides like briefly look at what did they do in the past, and also like in terms of backing multiple of deals like this, I wonder like number one is like, how do you encounter this deal really in very early stage? There's a lot of deal that just like hunt you down, like we're building like AI for this or that, like, and then when it comes to later stage, maybe the VC will chase the founder, but like in early stage, like you mentioned, like a lot of founders probably just look for you guys, but like when you get so many people reaching out to you from like everywhere, how do you quickly filter out 99% of the deal to get to a Cruise or Airtable?
Yeah, for sure. I mean, look, we take a lot of first meetings, right? Those meetings tend to be relatively short, 20 to 30 minutes. And in those 20 to 30 minutes, you try to figure out, triangulate a bunch of different things, right? Are these founders, builders, product oriented? Can they ship? Or are they more like kind of pie in the sky thinking, maybe really good at sales, but not so good in like the actual day-to-day building? You try to understand just how in depth they've thought about the idea. You really ask a lot of follow-up questions, and see like where they go like, actually, I don't know the answer to that, but let me see. You want to see like how much depth, because there's some founders who are like, oh wow, I saw a McKinsey report on AI. That seems like that's gonna be big. Let's go build AI. And it's like, that's not a good enough insight. But there are founders like Allison in Modern Health, for example, who spent a bunch of time at Collective Health, thought about this idea, saw the idea firsthand, where customers were asking her for this product, did a bunch of work before she decided to leave and start Modern Health. So, and you see this across so many other founders in our portfolio. So you try to understand the authenticity of the founders. What is a trajectory that allows them to be the right person to be building this? We try to validate the idea within our network. Usually a lot of the founders we can back channel pretty quickly, right? So you're trying to figure out, is this the founder that's more of a corporate ladder climber and is going to become a VP and CXO one day? Or is this a founder type? And a lot of times those founder types end up like not becoming great employees because they're a little bit rebellious. They're a little bit hacker types. They don't like rules too much. They don't fit the mold of a company as sometimes very well. So you try to like triangulate across a bunch of different signals to say, okay, could this be gold, or am I looking at brass or bronze? And I think the moment we feel like this may be gold, that's when we drop everything else. The entire team kind of coalesces around doing diligence of this one deal. And within a couple of weeks, we have a pretty good sense of whether we want to do this or not, right? And of course, look, we're taking on a lot of risk, which means we don't always get it right. But we also then spend a lot of time with the founders post-investment, right? And sometimes the ideas pivot. They certainly evolve and morph a lot post our investment. And like to us, that's a feature, not a bug, right? We want that to happen. I think if the founders are too prescriptive and like stuck on like, no, this is the idea, this is the customer, and I'm just gonna like push it through. Sometimes it can work, most times it doesn't. I think most times you kind of want to let the customers lead the dance and like sort of get feedback from the customer and then keep iterating to navigate to the right kind of hook that works, that customers are willing to pay for, and then you kind of build from there. So, we do a lot of work on the team, the idea, the market, the timing, and then a lot of work post-investment.
Totally. So speaking of doing a lot of work post-investment, let's talk about like, raising a fund. So like in 2022, Afore raised like $150 million fund, and then 85% of them were from existing LPs. Can you talk about your fundraising journey as a investor? And then like, when you started Afore, like what does the first fund look like in terms of fundraising? Where did you raise from like, oh, your best friends, or like what did you shoot for like institutional investor right away? Like how do you go about it?
Now, I've now raised money as a founder of a company and also as a founder of a fund.
Mhm.
And
Your venture capital startup is working.
and like there's some similarities, but a lot of differences. One of the big differences is when you're raising money for a company, right? You know exactly who to pitch, right? Because VCs shout from rooftops, right? Come talk to me. I'm a pre-seed investor. I'm on podcasts. Like, email me. Come to my events. And it's like fairly easy to get in front of VCs. Obviously, not easy to convert, but easy to get in front of them. When you're raising money for a fund,
Is it easy to convert? I'm just kidding.
Yeah, easier, I'd say in some ways.
Really?
But I'll tell you why. But like, first of all, it's really hard to figure out like who to pitch and like who to get in front of, because like these LPs,
True.
family offices, and endowments, they're not shouting from rooftops saying like, "Come talk to me, email me. I want to hear your pitches." A lot of times, like the richest families, like especially family offices, they're very discreet. They're very under the radar. They don't have a website. They don't have like a mailbox, right? So lead prospecting and lead qualification is actually really hard. But once you qualify the lead, the nice thing is that some institutions obviously have a strategy and a budget and stuff, but a lot of other LPs are saying, hey, look, this is a good idea, good team. Like I can make money here, maybe even beat the stock market. I'll invest. So in some ways, the conversion can be easier once you found the right lead, but finding the right lead is the hardest part. But I'd say we've been lucky that 90% plus of our funds have been institutional in nature. So that means like, a mix of pension plans, endowments, sovereign wealth funds, fund of fund, so on and so forth. It's been, you identified more or less the same LPs across 3 funds. And part of the reason is because we invest very early, right? We're investing at, as I said, the idea stage. So I think for you to feel comfortable with that level of risk, we should be a small part of your portfolio, right? Even though we think that in a diversified portfolio, it's okay, but it is early, right? So if you're a small part of our portfolio, but we still look for meaningful checks, right? Given the fund size, you just do the math, and you just have to have a significant amount of AUM before this makes sense. So we don't have a lot of like high net worth individuals as LPs. We have some, right? Of course, just really close friends of the fund, or very notable founders who we wanted to be involved with the fund, but that accounts a very small part of the capital base. Most of the capital base is, as I said, from institutional capital. Because, for them, it's like, look, we were a diversified portfolio, and where Afore really fits in is this like very high alpha strategy that, is somewhat risky, but, if it works, it can really move the dial for our AUM. But look, it takes time, right? It took us quite a few months to get the Fund 1 fundraise done. You've got to kiss a lot of frogs before you find your prince, if you may, and you just have to be in it with patience. And look, we also had LPs who passed on Fund 1 and came in Fund 2. We had LPs who passed on 1 and 2 and then eventually came in 3. So like, I think it's a long-term business. You have to be in it for the long run and build relationships and be okay with a lot of rejections. For every one yes in Fund 1, you probably had 10 no's. I don't know, 5, 10 no's, like a lot, right? And that's okay. It's a first-time fund. LPs, it's also a crazy product, frankly, to be selling to LPs, because you're asking somebody to give you capital when you can't tell them what you're going to invest in, what these companies will be building, who these founders will be. Like, none of that is known at the time. You just have to believe my ability to find these founders, to pick the right ones, to like then help them build something massive. Like, that's a lot of unknown. So I get why investing as an LP in first-time funds is very hard. And you want to see some meat on the bone before you part with your capital.
For sure. So I think you guys have ride a really big wave. I think the pre-seed market become like very popular these days. So you guys started at a very good time. And then like that's like a really big wave beyond your good track record, right? Like, so if I look at the logo, I'm already pretty impressed. And like after that, there's like a big wave that's going, like, basically playing in your favor. So I wonder, what does that mean for like if some younger like emerging solo GPs like raising for today? Like, what is a big wave that people could ride on?
Yeah, look, there's so many different directions that I think you can take this. It's a little bit like starting a company, right? There are certainly some macro, tailwinds, but I think you have to find your own niche, and I think you have to be authentic, frankly, to who you are. I feel like venture is, personal business in some ways. Like, it's so much about judgment and taste and your network, because 10 VCs may look at the same company and 5 may think it's like the worst idea ever, and the other 5 may think this is the next big thing. Like, and that's fine. Like, that is a good thing, because that means like more companies get funded, and like the more diverse ideas, diverse talent gets backed. And I think that's awesome. So it's hard to like pick one thing to be like, this is what everybody should be doing. I think people should lean on their strengths and figure out what their special sauce is, what their superpower is. I think what Anamitra and I, my co-founder, and I realized was like, for us, if we had one superpower, it was helping companies get off the ground and get to product market fit. Like, that is what we love doing. That is what we thought we were good at. That is something we had done in the past, and that's what we wanted to do. So I think that for us was very authentic. Obviously you have to do a little bit of marketing, and we ran with that, which at the time people like poo-pooed it, and people were like, pre-seed, that sounds like, adverse selection, worst part of seed. And funnily enough, a lot of those fund of funds now have like a pre-seed strategy, right? And like a lot of those people have funds at pre-seed. So like, it's funny how the world comes around, but that's okay, But I think like that's what we believed in, and we ran with it. I think, these days there's a lot of different directions. I mean, I think if you're more sector focused, obviously AI is huge, right? I think you could probably pick a few swim lanes within AI that you think could be big, and you go find the best founders that are working on that, or you incubate ideas that could work. I think helping founders, earlier and earlier could be also interesting. I mean, we're doing a bunch of that. We launched a program called Founder in Residence, where we help founders build conviction on their idea, right? So even before they're ready to raise, there's usually like this idea maze that founders go through before, they start off with 10 ideas, and they have 5, and they have 3, then they finally have 1, and they have like 3 people they're thinking of starting the company with, and they finally pick 1 co-founder. So, how can we help in that journey, I think is also really powerful. So that's one direction we're running in. So I know there's a lot of different things you could be doing to support founders. Ultimately, I think what doesn't change is like, we have to be in service of founders, right? Where we exist to help founders realize their dreams, realize their vision, build their companies, right? We're very much in a support role. And there's many different ways to support them, right? And we picked one, which was, we wanted to invest when everybody else was telling them they were too early, right? And the fund was telling them, I like your background, I like your idea, but you're too early. Go raise money from somebody else, angels, friends and family, and then call me. And we were like, hold on a second. That sounds like a disservice to founders. Why don't we do this service to founders? We will give them the money they need and the help they need to get to product market fit. There's lots of other ways you can help founders. And I think you have to really be first principles driven in this business and do the right thing. And I think, opportunities are plenty.
Do you think the best founder are like the best technical talent. I'm very thankful to be a part of your happy hour last time, and I met some really wonderful founders. One of the founders was from like I believe NVIDIA or OpenAI, and then like I wonder like so to incubate these talents. So let's say they have really great career track record, work at the OpenAIs of the world, and then like coming into Afore as a founder resident, assuming you're leveraging that time to also get familiar with the founders, de-risk yourself a little bit by spending some time with them and then helping them figure stuff out. I wonder, do you feel the highly talented person will become a highly talented founder? Let's say if I went through the founder resident and then you guys found out like, okay, this person is very smart and then it's a perfect first engineer for X company instead of being a founder themselves. I wonder how do you deal with that situation? And then from a portfolio construction perspective, how much of your time are spending on incubating things in-house versus finding some people outside?
Yeah, look, building a company is very hard and
Mhm.
it's a long journey. And I think you have to almost be irrational to want to do it, right? I think
Mhm.
I haven't seen this interview
Mhm.
yet, but the founder of NVIDIA, I think did an interview recently,
Mhm.
Jensen, where somebody asked him, like, would you do it again? And he was like, no way. Like, it was so painful to just build NVIDIA, right? And I think that's like super true, right? Because building these companies is painful journey and risk adjusted, actually a very bad way to make money, right? You're much better off keeping a job to make money than starting a company. So, and we don't take that lightly. And our job is to, with the founder residence program, help the founder figure out if they want to start this company and is this the idea they want to pursue for the next decade or two, and like, do they really want to do this? And we do it by helping them get in front of customers and do customer validation and like see if there's like
Mhm.
any kind of market pull for what they're working on. Because look, if the customers don't care about your product, it's a very, very hard journey and not fun, right? So I think we help them figure that out. And look, it happens where after our 10-week program, these amazing, talented people realize that maybe I don't want to start a company yet, or maybe it's not this idea. Maybe I got to keep working on a different idea or keep looking for the idea. And that's part of the plan, right? We like not everybody is going to start a company coming out of the program or raise lots of capital. That's okay. We very much have like built the product around that. And it's just like in Silicon Valley, frankly, startup ecosystem thrives because failure is not like looked down upon. People don't judge you for that. In fact, in some ways, like once you have one or two failed startups, you become even more attractive to VCs because you're like, you did all the learning and now you're going to go build
Mhm.
great. And that's fine, like that. So we very much support that. And of course, the folks that find and validate their idea and they want to go build it, we'll support them as well, and we'll help them get to the next stage. So and I think that's why you have to be not overly prescriptive about like, no, like this is the idea, or we got to give you money up front, or whatever. And I think if you wait too long for the idea to be baked, you feel like you miss an opportunity to really service the founders.
For sure. And in terms of building a great fund, since you're the managing partner of your fund, I wonder how much time do you spend on fundraising? Because for VCs, the like people always say founders are always fundraising, but VCs are technically always fundraising as well. How much time do you spend on either fundraising or sourcing the deal or doing due diligence of deal and then promoting yourself? There's so much stuff going on. I wonder how do you structure your day? And then let's say three core jobs. What do you think VC's three core jobs are?
Yeah, look, 70% plus of our time is spent in the search of the next investment we want to make. So
Okay.
we are hyper focused on sourcing, diligence, moving really fast. I mean, like, sourcing 6,000 opportunities a year across the team, that's not easy. That takes a lot of time, right? And then trying to then narrow that down to 10 you want to invest in, that also takes a lot of time, right? We're saying no a lot. And a lot of times we run a sprint, do a lot of diligence over 2 weeks, and then say no, right? So like that takes up a lot of time, and like vast majority of our time is spent there. I say that 20% is spent on supporting portfolio companies, right? Especially in the 0 to 1 phase. We don't support companies like for the life of the company. We don't serve on boards forever. We think again our superpower is at 0 to 1 phase. So like, how can we help you get to Series A? How do we help you get to product market fit? So I spend a significant amount of time doing that, but that's only like probably 5, 7 companies at a time that I'm supporting, and then my co-founder probably has a similar number. So it's not a lot of companies, but we spend a good amount of time doing that. And then the remaining 10% tends to be around fundraising, and even fundraising, I'd say, is a lot of like existing LP management, right? Customer service, if you may, like our annual LP meeting, which we had next week, and like preparing for that, or we do quarterly calls with our LPs when they're in town, like, hosting them, giving them update on the fund, and then of course a few new relationships we built on and off, and then like mentoring our team and helping support build our team, a little bit of branding activities, like a whole bunch of other stuff, back office stuff, admin, like we're a small team, and we want to stay small because we think that's the right kind of fund strategy and fund size. But like what that means is like I and my co-founder end up having to do a bit more of the non-investing stuff than frankly we would like. But that's the sort of the split of the role.
I know that you guys have the best younger people at your firm as well, beyond like the good founding partners. And shout out to Jack. I know that like the younger people can give you a lot of deal flow as they're always on the ground, like meeting 400 people a day or something. I was a younger associate myself at one point. Every day I'm like encountering a ton of deals and I'm sending to my boss. So I wonder, how do you train your team to develop a good filter? Since I feel like if I'm bringing in another 6,000 deal to you, that will be a disservice because you only have limited amount of time. I wonder, how do you making the deal better quality?
Yeah, look,
When it comes to
it takes
source.
time. It takes time, right? Number one, it takes time to build judgment, to build that taste, and to also understand like what's an afford you, right? And like as I said, every fund has got their own little different view of the world, and so do we. The way I try to inculcate and build that DNA, that taste, is I ask our team, like, look, across all the companies you met this week, what's your number one favorite, right? If there was one company you want me to meet as a second follow-up call, which one is that? And what that forces people to do is to sort of calibrate across everything. Because look, the reality is like we're only going to make a very few number of investments. So like what I don't want to hear is like I met 20 companies last week and here are the 10 that are interesting. It's just like the odds of us investing in all 10 is very low. So what I want to hear is like what's your absolute favorite and why? Or maybe give me two, but that's it, right? And like that then makes them think and like compare deals to each other. And obviously, it allows me to only meet the stuff that people are really excited about. But I think more importantly, it helps them build their taste versus, outsourcing judgment to me, right? What's not great is like, hey, I met 20 companies. Okay, 10 were obviously bad, but like these 10, you tell me what's interesting. And it's like, I could, but like, that's not helping you develop, right? Because what I want to eventually get to a place is where you're just sponsoring the stuff that you're excited about. And of course, we're going to discuss and debate as a team, but I want to get you to a place where you can be a check writer and you can be investing yourself. And I think if you're just outsourcing judgment to me, you're not going to get there. And I think, and look, I had that luxury at Founder Collective, and I give a lot of credit to the team there. They gave me that agency to really do that work myself and build that independent thought and then come to the team, having done a lot of that work to make that case. And then we would kind of debate it as a team, and then some stuff got done, some stuff didn't. But I think that's a good way to sort of, be productive with my time, but also help them develop.
When it comes to building a really good fund, like, do you see yourself as like going after the A, C, and Z of the world, or do you feel like you wanted to about like a really small practice, but only like, few investors, but they're all like killers? And then do you feel like your associate will one day become a partner here? Or do you feel like, some funds are never like the associates are never going to be promoted because like they just don't have that system. They just have like, two partners making all the decisions all the time. So I wonder, like, in terms of building a fund, like what do you envision are things that you want to do for your fund?
Yeah, look, I think we certainly don't have any aspirations to build like an asset gathering platform fund. I think there's definitely a place in the world for funds like that, especially for really large LPs that are looking for exposure to venture. I think you need to have a large fund to do so. And a lot of those funds can then have multiple strategies and products and invest in this sector, this geography. That's great. That's a certain strategy and it works really well for them. It's not really authentic to our DNA. I think what we love doing is like spending time with the founder when they're just getting started and like just focus on that 0 to 1 stage. So I think that's what we want to build. We like having a small, nimble team. We like having everybody be autonomous to some extent and like being each person being like an equal contributor to the team versus having this massive army and hierarchy. Is just, again, not like, aligned with the kind of personality that we have and what we enjoy doing. So, look, exactly what that product looks like and how it evolves over time, it's really hard to tell, right? Just like I talked about connecting the dots looking backwards. But I think what we want to keep doing is continue to like hone in our craft of like helping companies get to product market fit, getting companies off the ground. And look, if we can develop that and do that repeatedly, that's really, really valuable, right? Because the world has tons of problems to be solved. We need lots of companies to go
Mhm.
solve them. And if we can just increase the odds of these companies becoming successful businesses one day, that's huge. But I
Mhm.
think we'll do it in a focused strategy. We'll do it as probably a small team, but certainly have aspirations that the right people in the team can grow and scale over time. That'd be huge because there's definitely a lot more work to be done that the two of us, can't do. I don't think it's a 20-person partnership, 20 investors, but it's certainly more than two. And I think we're just looking for kind of the right people to step up.
When it comes to, you mentioned like, you guys are helping founders to get to product market fit. Since the time that you guys have built product, that was a long time ago, since you guys are professional VC for a 7-year-old fund, right? So I wonder, how do you stay up to date in terms of the concept of helping the founder in the operational side? How do you scale that process, right? Since you're not going to only invest in one company, it was like kind of an outside advisor coming in. How do you scale your specialties among all your portfolio companies?
Yeah, if your question is around like domain expertise, we tend to be generalist investors and almost think of ourselves as like pre-thematic investors. A lot of investors are thematic, right? It's like, I
Mhm.
want to invest in MarTech or defense tech, and that's great. For us, we're very founder driven and we're investing so early that frankly, it's not even clear exactly what the market will be. And like if you had invested in Uber back in the day, like the on-demand economy wasn't a term, gig economy wasn't a thing, transportation wasn't like an interesting sector. So I think you have to be very open-minded on that and just back the best founders in building something interesting, and then you kind of like, you help it go from 0 to 1. Where we tend to be more helpful is sort of the cross-functional kind of how do you build a team? How do you fundraise? How do you get your first few customers? How do you think of pricing? How do you think about de-risking the business? That's where we tend to be helpful versus like, I know exactly what, marketers are looking to buy or like how, scientists think. Like that's not our bread and butter. And we spend a lot of time with founders, right? So like the founders tell us, right, what problems they need solved, and like we keep reacting to that and iterating and building products. Like founder residence program is a reaction to that, right? Where we heard from founders over and over again, like, look, help me even before I am ready for a four. And like sort of we thought we heard that enough, and we said, okay, let's build a product to support that. So again, we're trying to embody what we tell founders to do, right? As they build their company, we're trying to build our own business the same way.
Totally. When you are thinking about like building a great firm and then like, investing in the best deals, like you mentioned about like, founder residency program. And then before, I don't know if it's still around, but like you guys had like a 4 alpha, like, in terms of like thinking about the best practices, like building some programs to help founders succeed, like what are your thoughts on that? Like how does that going in the future? Like where do you see kind of like Afford doing it in the next 5 years?
Oh man, it's so hard to predict that because again, we're gonna keep running experiments. We run so many experiments in the last 7 years. Peak pandemic, we had this program called 0 to 1, where it was kind of like a very, very rudimentary version of FIR. It was virtual, obviously peak pandemic. And we had like founders of Airtable and Segment and all these interesting companies come and talk about their journey of building their companies. So we did that, but we realized that class size was too large. There was 120 companies that went through that program, and we think it's just really hard to support companies at a very like granular level at that scale. So the FIR program tends to be much smaller in size, closer to like 10 companies versus 120. We've run go-to-market school in the past to help founders figure out how to get their business off the ground. It's got all kinds of things, and now we're experimenting with this. So I don't know. We'll keep running experiments. It's really hard to tell exactly what that looks like. 5 years is a long time, but I think again, what it's going to be all about is like how do we help founders, get their business off the ground and get to product market fit. It's somewhere along that journey that we can help you in some way or form.
After building your own company, this was like back in time. So after you building your own company, why did you build another company? Why do you feel like venture was a thing that you wanted to
Yeah,
build
yeah.
upon?
And it's very much a personal decision, right? I think there's no right or wrong answer. LeBron James would probably make for a pretty poor coach, right? Because like he's a good athlete and he probably wants to run his own plays and like maybe he'll be a great coach, but probably not. And there's certain people that are like really good at being coaches and like maybe we're fine athletes, maybe not the best, and they're okay with that, but their temperament is just more oriented around building other people and like helping them in that way, thinking more strategically, thinking a little bit like zoom out, right? So you're thinking about all the plays on the court as opposed to like just my play. So
Mhm.
I just felt personally for me it was a much better fit. There was no like right or wrong answer to these things. But I felt, and again, it was an experiment. Initially, I didn't know if that was the right thing for me, so I just kind of worked part time at Founder Collective while I was in business school, and I enjoyed it, right? And I was
Mhm.
like, I think this feels like the right fit for what I
Mhm.
want to do, what I enjoy getting up in the morning doing. So, and that's been that.
What kind of like what does your co-founder brings to the table when it comes to founding a fund together?
Yeah,
Beyond the good track record or like all the awesome experience at like Foundation Capital and stuff like that.
yeah, I mean, in some ways, it's like us being co-pilots, right? It's like there's a lot going on, and like we divide and conquer a lot of stuff. We are a sounding board for each other, a counterweight. A lot of times, I'll get excited about a company, and then he'll like sort of, help me rationalize it and bring me back to earth. And I've thankfully not made many of the bad investments that I would have made if it wasn't for him. We have different strengths and weaknesses, so we support each other in that sense. And it's also like really lonely sometimes to be like running this business, and like funds tend to be small teams, so it's like it's nice to have somebody there on the journey who really cares as much as you do, and has the right incentives, and has a different perspective on things. And I think it's sort of 1 + 1 = 3.
Totally. We'll go for the 1 minute fire round. So number one is like, what's your favorite book?
I mean, I have so many favorite books, but I thought Thinking in Bets was an interesting one. I think it really sort of made me think a little bit differently on how I think about venture capital, sort of in a more probability adjusted business. Yeah, look, I say probably if I have to like zoom out ever, Clay Christensen's stuff has been the most kind of
Mhm.
consequential for me. I was very lucky to have him as a professor when I was in business school as well. But his books around innovator's dilemma and innovator solution, and
Mhm.
sort of thinking about disruption and thinking about bringing new technologies to market is probably the one that has had the most impact for me.
I can't believe you actually took his classes, but that's really cool. Who would you invite to your dinner party?
Well, my wife, but I'm lucky to have dinner with her quite often. So is it like I get to invite one person or something?
It's your party, so
Oh, look, and I can have lots of people. Well,
yeah.
I'm a huge fan of Naval. He's I think one of the smartest people in venture, so I definitely would want to have him. I used to spend time with him before, but now he's got a lot going on in his life, so I don't get as much face time. But I think he's still his writings and his work is incredible. I think Barack Obama is really interesting. I certainly would love to have him. I think it's one of the most charismatic people and smart people. He's obviously had a lot of impact over time. Some of the freedom fighters for India back in the day, we're getting philosophical now, but like I benefited a lot from that, having grown up in a free India versus one that would have been under British rule. And I'd love to just thank them from the bottom of my heart for the sacrifices they made to free India and allow India to be where it is today. Obviously, my parents, family. There's a lot of people, but I like small parties, so I'll probably keep it fairly small.
Amazing. Who made the biggest impact in your career?
There's a lot of people that have played a role, small and large. Obviously, like I mentioned, my dad was pretty impactful and sort of just being a guiding light. But there's also a lot of other folks along the way. That my team at Founder Collective that gave me a chance to enter venture capital, and then help me fundraise for Afore as well. People that helped me get internships when I was back in Waterloo, help fundraise for our company. And there's a lot of folks that have indirectly been very helpful.
Where can we find you outside of work?
A lot of time with the family as much as I can. I've got 2 young kids, so it's a fun age they're in right now. So I spend a lot of time with them. Date nights with wife. That tends to be honestly the majority of it. And some trips, but that tends to be mostly with the family as
With
well.
your family.
Hawaii and things like that. But honestly, between work and family, it's just there's not a lot of room for better or for worse for a third thing. And I watch a bunch of sports too, so that may be the other thing in front of my TV watching either Brock Purdy with the Niners or
Mhm.
Steph Curry with Warriors or the Indian cricket team right now playing in the World
Mhm.
Cup.
What do you identify as your unfair advantage?
Probably a better question to ask people around me, but I think it's a healthy mix of being supportive slash like friendly. I think I come across as like a friendly person to folks, yet being demanding, yet being like I think I can be tough, but I need to be, and I think that combo allows me to, I think, build a relationship with founders where, you should check with them. But I think they listen to me and they hopefully respect me, but I think they don't hate me. I think that's important in venture.
Totally. Last question. What's your content diet look like?
What do I consume for content?
Yeah.
Honestly, these days I'm just on podcasts like nonstop. Like when I'm in the car, when I have any downtime, I just find that podcasts are such a specialist opportunity because it's like having coffee with somebody without having to have a coffee with them. And I usually listen to them at 1.8x. So I get through a lot of content pretty quickly. And honestly, I don't even get a chance to read that many books these days. I do read a little bit, but not a lot. I don't really watch much TV or any of that stuff. It's literally podcasts when I can. I try avoiding the news when I can. A little bit of Twitter, but honestly, podcasts is probably where my 80% of content consumption comes from.
Amazing. Thank you so much. I really appreciate this.
Thank you very much for having me.
Thanks for tuning into Smart Venture Podcast. If you learned something from the episode or even just mildly tolerated me, please subscribe and leave a 5-star rating. I promise I will keep bringing you more successful, insightful interviews and insider tips about startups. Remember, sharing is caring. So tell your friends to listen too, or enemies, I won't judge. Until next time, keep venturing smartly.